Do you have a specific trade strategy to identify the confirmation of a trade and the specific stop level? Well, you're going to learn that today on a current market that I recently used as a trade setup example. I'm Robert Miner with Dynamic Traders Group, and this is our weekly trading video where I teach you a specific trade strategy on a current market position. It's a brief version of the more extensive videos we provide our DT Report subscribers every Wednesday and Saturday, plus the regular updates between video updates. This week I'm going to do something a little bit different that I typically don't do. I'm going to follow up on the Bitcoin analysis and trade strategy of just last Saturday's video. So if you want to review that setup, you can look at last week's video where the whole video was about the position of Bitcoin and that potential trade setup, which actually got initiated early last week. So even if you don't trade Bitcoin, what you learn in this video you can apply to just about any market and any time frame to make your trading decisions. And be sure to stick around to the end of the video where I'll take a brief look at the current S&P position. And again, even if you don't trade the S&P, what you learn you can apply to other markets and other time frames. And while you're watching, feel free to comment below about this video and what aspects of practical trade strategies you would like to learn. So this is the Bitcoin daily data, and it's the close-only data. The end of, not this past week, but the prior week, Friday, January 7th, was a key time target to complete at least a daily low. And because Bitcoin was in a position to complete a weekly low as well and potentially complete this 5-wave decline from the November 21st high, we anticipated a fairly significant low, and we're looking for a get-long trade strategy. Well, that trade setup was triggered on Tuesday. This is the Tuesday bar right here. I'm going to reduce this data just a little bit. That was a higher close bar that was made on Tuesday, actually closed above these 3 or 4 closes of the prior few days. That was the specific go long signal for Bitcoin, and it was following a daily momentum dual look back bull reversal. So everything was in position to complete at least a low lasting a few weeks as of that period of time, and it was a good setup for entry. There's been very little follow-through to that so far, but what we do is we don't forecast, we identify trade opportunities. So that was a trade opportunity with a stop just below the prior day's low, and that's where we're at this point in time. Long Bitcoin, or it could be long MARA, or long the GBTC, or some other substitute for Bitcoin, an ETF or a stock or whatever. But the point is that once you enter a long position, and actually before you enter a long position, you should identify where is the stop going to be in case the market doesn't follow through in the direction anticipated. So of course, if this is a reversal, then it's a reversal. That means your stop is 1 tick below that daily low, and that was just the low prior to the day of entry. So that's where we're at this point in time. The stop is at that low. So do you want to remain in the trade if the Bitcoin should happen to decline? Well, here's my point of view is, boy, you want to get out if that reversal is not confirmed with a continuation of the bull trend. If it's invalidated by trading below that low, what do you want to be aware of? Well, here's something really important that you want to be aware of, because if Bitcoin should fail to continue on the upside and takes out this low, that low is made right around this September lows. And everybody in the world trading Bitcoin is going to be aware of this significant area. And that's kind of the last stand on this decline. And that's right about where this reversal was made. Now, there were time, price, pattern, dual time frame momentum. Everything was coming together at this point in time, just a little bit above that low. But if this fails to follow through in the upside, I could easily see some panic liquidation in Bitcoin if it were to decline below last week's low and then below the September low. So again, you want to get out, that's your stop, if there's no follow through, and if Bitcoin happens to turn around, take out the low. That's why whenever you have a trade strategy, You have to identify, actually, before you enter, where you're going to put your stop. And is the capital exposure reasonable? That's why we say we identify conditions with a high probability outcome and acceptable capital exposure. And then you need to identify what confirms that low. Well, in this case, a close above 46,211. That's this swing low close. That'll be a confirmation that a weekly low is complete, and more than likely Bitcoin will continue to the 50% retracement. Now that's the confirmation. Of course, the stop or the invalidation is below last Monday's low. So that's the trade position. Was the trade set up last week. It was initiated on Tuesday, and that's our stop. And that's what confirms a continuation of the bull trend and invalidates it. And once again, boy, if it comes down below last week's low, is really be careful on the downside in case there's some acceleration and panic liquidation below the September 2021 low. That's what we're looking at for Bitcoin over the next few days. Like I say, typically in these videos, I don't follow up on what we looked at the week before, but this is really a great trading lesson about stops, confirmations, invalidations. So let's take a quick look at the position of the S&P, because boy, the next week or so on the S&P is going to get really, really interesting. Before we continue and take a look at the current S&P position, be sure and click on the link in the comments section and get signed up for our DT Reports news. It's a completely free membership. You'll have access to some other trade alerts that we give during the week that we don't put up on YouTube. So check that out, get more education. We're really into education here at Dynamic Traders Group, so you can learn to trade any market in any time frame and make your own trading decisions. Okay, let's take a look at the current position and the probable outcome of that position for the S&P. This is the SPX daily data, and it's the close-only data, as you can tell. I really like close-only data, particularly on indexes and stocks and some other markets. It's more helpful than the intraday data. But the close-only data coming up from the December 21st low, the SPX has made a new high. So we had a section up, a decline, a section up into a new high, and then another decline overlapping with the initial section up. So that leads us to think that there's one or two Elliott wave counts going on here, and they're very important counts. They both have the same outcome, but one is a much more dramatic outcome than the other. So more than likely, this is my quote-unquote preferred wave count. Let's not even get into preferred and alternate wave counts. Let's just identify what the market can do to confirm or invalidate a count. Again, probably a 1 and a 2. Ignore these labels in red for now. 1 and a 2, a new high to a 3, a 4 that overlaps into the closing range of wave 1. That would indicate this is what's called an ending diagonal. And so if the S&P in the next week or so were to make a new high based on closing data, here's what I want you to keep in mind. That will be a really significant high if that's made. And when the market turns around from that, which would be within the next couple of weeks, is an ending diagonal is usually followed by a really brutal reversal and an accelerated decline on the downside. So that's a potential in the next few days. What happens, or a week or two? What happens if the S&P just continues to decline? Well, if the S&P were to make a daily close below 46.16, that's a 78.6% retracement on closing, is more than likely is not making an ending diagonal. But because this is a new high and it's only 3 sections up, it's not an impulse wave, has to be part of a correction. Now, how do you have a correction that makes a new high? Well, it's called an irregular correction in Elliott wave terms, and that's where these red counts come in. As a probable A for a decline off of the November high, and then a smaller degree A, B, and C to a new high. That would be a B. And then if the S&P were to continue to decline, more than likely it would continue to below the December low and what's called an irregular A, B, and C. That would be a wave C, an impulsive trend on the downside. Either way, within the next, let's just say at the maximum 2 weeks, more than likely the S&P is going to turn around and then eventually take out the December low. If it should unfold in that ending diagonal, make a new high in the next week or two, and then decline, that would indicate a much what we call higher degree top had been made. So that's what we're looking at over the next week or two. So here's the parameters. And they're really clear cut and they're pretty close to the market. Should the SPX make a close above the the January 12th close at 47.2635, more than likely it had completed a wave 4 and it's going to make a new high in a wave 5. That'll be an ending diagonal. That'll be the ramifications and aftermath of that would be very bearish. If by chance the S&P continued lower next week, made a close below 46.16, more than likely it's that alternative A, B, C irregular correction of some sort. Probably continue to a new low below December, but it would not be anywhere near as dramatic a bear trend. So that's what we're looking at in the days ahead. There's a little bit more to that on the current price position and all, but I've run out of time for this week. So remember, click on the link and register for our free DT News membership, where you can receive more alerts and practical trade education. And of course, subscribe to our channel to be notified when our weekly YouTube updates are posted. Have a fantastic week. Please keep healthy.